Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Welcome back to the show, Josef.
My pleasure. Good to be with you, Jim.
Josef, as we're speaking here on Thursday, the stock markets in North America are really taking it on the chin. Some stocks down 10%, a few more than that. What's that tell us about the Fed's rate hike yesterday?
Well, the concern was that the Fed was talking that they were, going back 6 months ago, they were only going to do 25 basis points. Now they're saying they did 50, and they're saying the next ones are going to be 50. One of the reporters or analysts in the room said, would you consider 75 if the data justified it? And he said, no, we're going to stay at the 50s. So the market, took it yesterday as positive that the Fed wasn't worried. And then this morning, more data is coming out on the economy. And there was one report that I saw on CNBC that said that it was a measure from small business that 91% of small businesses in the United States in the survey expected a recession this year. So we're seeing some very nasty economic data in terms of productivity, in terms of the labor issue. Wage rates are going up for the shortage of workers. So the economy needs a recession to cool down things. And of course, a lot of people have made so much money in real estate and the stock market that one of the ways you pull away, the arrogance or the aggressiveness of buying and leveraging and buying more is by pulling the rug out. And real estate's harder to do. You can raise interest rates, and that makes it affordability a problem for lower and middle income. But the easy way to get the wealthy is for the stock market to get beat up. And rising interest rates, margin calls, and bad numbers from companies. We saw Shopify with bad numbers today, and now we're looking at a Dow that's down 1,300 points, and I think Shopify's down 10% in one day.
When you're looking at numbers like that, a lot of people describe the selling today as panic selling. Is that the case?
I think this is still early. I think that, if you use a golf analogy, we're on the third or fourth hole. There's a long way to go. I think I've been saying this in my writing, and you and I've talked about it, is I thought the Dow had a 25,000 level on it by Q3. I still believe that's the case. The S&P 500 I thought would see 3,700, and so right now I think we're 4,100 something. So there's still some significant downside. And for things like the NASDAQ, which were around 16,000, I thought it would go to 10,000. So there's still, I think it's 12,000 something today. So I think there's still a lot of downside ahead. It doesn't mean we're going in a straight line. It's going to be, up, down, yo-yos, and 1 minute the bulls will think everything's great, and then you'll have a short covering rally that'll beat them up, and they'll have to, cover their shorts. The next one you'll have a plunge, and then the bulls are going to have to get margin calls. So it's going to be a waterfall movement downward, but over the next couple of months, but with some very sharp contra the main trend bounces that are going to be painful for those who are leveraged too much in the direction that in the direction that is going against. So I think energy is one of the sectors that's lagged. It's done very well deliberately because of what's going on in Ukraine and OPEC, and the fundamentals have been fabulous. But the stocks have gone up so much that there's a lot of air in them. If we have a serious correction, which I believe we are seeing right now, and that means we're going to see the energy sector get beat up. And stocks are today, some of them are down 5% in the Canadian side. You've got Enerflex today down 6.7%. You've got Precision Drilling down 6.6%. You've got some stocks even here. I'm seeing 7% down stocks. The index, the Canadian Energy Index, is down 2% today. So we're getting the early part of a decline in the energy sector. But before this is over, I think it could be a 2-for-1 sale.
In Vancouver, again, we're expecting record high gasoline prices that would put us just over $8 per U.S. gallon in Vancouver. Can consumers continue to pay these kind of prices?
That's the problem. It'll mean our driving habits will slow down. We won't go as far. We may not do the driving holiday during the summertime. But the squeeze is going to be in energy. It's going to be in shelter costs because, of course, rents are going up. And if you have a mortgage renewal, you're going to have much higher interest rates. And then the big one, I think, is going to be the shock, the sticker shock when we go to the food stores. I think we're looking at we haven't seen the pass through yet of all the grain price increases because first in first out FIFO accounting. Whatever you bought 3 months ago that you're selling today in the store, that you make your margin on what you paid 3 months ago. Well, buying that new today, and you're going to have to pass those costs on in the next 2 to 3 months. So I think that the food inflation is going to be the big shock to all of us. That's going to be the sticker shock that changes our spending habits. And if you say, oh, my house is up 30-40%, you have a wealth effect, or you had stocks that did really well. Well, the underpinnings on the stock side are coming off, and I think at some point we're going to see real estate prices start to come off, and then all of a sudden this wealth effect that people were immune to the inflation problem, they'll start reacting to the inflation problem.
Now, the Bank of England raised interest rates today, and they say there is the threat of recession. I think they're the first central bank to really admit, honestly, what's going on with the economy.
I think that's correct. Yeah, the Fed yesterday kind of implied that they're so powerful and so omnipotent that they can create a soft landing, which they've never been able to do. And he's so behind the curve on the interest rates and on the inflation side. He talked the talk, and yesterday the market reacted, but people had a cold shower overnight and said nope. We don't believe it. And I think that, the U.S. probably by Q3, remember the first quarter was a negative 1.5 for real GDP, and everybody thought that was going to be a positive 1 to 2% number. And then they spin it by saying, oh, a lot of that was related to, inventory, and exports going down because of the strong U.S. dollar. Well, the U.S. dollar is even stronger right now. And you've got the inflation side coming, and the unit they said that one of the positives was consumer spending, but consumer spending after inflation was negative, so they can pop a positive number because of the inflation in it, and then they run with that. But the reality is the numbers were poor right across the board, and tomorrow it'll be interesting to see what happens with the employment data. If the jobs that are created are mostly in the service sector, low-paying jobs, not in manufacturing, not in the high-paying industries, then that'll be another warning sign that things are going to be tough going forward. Because the service sector, they can be hiring very quickly, or they can be laying off people very quickly, depending upon the volume coming through their facilities.
Yeah, one of the growing job sectors here in Vancouver is volunteering to take the place of someone waiting in the lineup for passports. It can take you 3 days of being lined up now in Vancouver or Victoria to get a passport, and people are charging $50 an hour to take your place in the line, and they'll call you when it's your turn.
Oh my, I didn't know that. That's nuts.
Yeah.
Absolutely nuts. And yet there's, places where people who work in in McDonald's or in a retail store, and they're getting less than $20 an hour. Shocking.
Well, in Vancouver as well, the security lineup stretches from the domestic terminal to the international terminal. If you know Vancouver, that's quite a distance. Again, a wait 2.5, 3 hours just to get to security. They only have 5 lanes open when they could have 13. The top pay for an airport security person is about $22 an hour. No wonder they can't find enough people.
Yeah.
Yeah.
Yeah. How do you live on that kind of wage in Vancouver? Not easy.
No, it's not. We'll have more with Josef Schachter right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. We're getting into election time in some provinces in Canada. Ontario going to the polls. The Conservatives are holding their leadership race, and they're all saying that the big thing the Canadian or Ontario government should be handling is inflation. But what can a single provincial or federal government do when inflation is a worldwide phenomena?
You just said it. If it's a worldwide phenomenon, provincial governments really don't have anything that they could do except for making sure the supply chain in the province is working. So that, roads are, you don't want another trucker strike blockading roads. You want to be able to make sure that, that the stores have food, or you'll see people hoarding, and that'll make things even worse. There not much they can do. The one thing that's in their favor, though, is, of course, the economy has been so strong. Tax revenues have been very good, that even provinces that have deficits are going to have much lower deficits, and provinces that are resource focused and have benefited from the bounce in resources, Saskatchewan, Manitoba, Alberta, and BC particularly, are going to see much healthier financial positions when they report back to the communities, to the citizens.
Yeah, and I'd say in Ottawa they have a reluctance to deal with high gasoline prices because they charge GST, a percentage on the overall gasoline bill, taxing the provincial and local taxes as well.
Yeah. I think the governments are benefiting from the different tax levels that they have. Some of the provinces, like Alberta, have removed the provincial gasoline tax, but with the price of oil going to 108 US, we had a 7-8 cent bounce just in the last 48 hours in Calgary here. So I don't want to make you feel bad, but we're 164 or something. And I think you're probably pushing $2 in BC. But
try $2.15 a liter.
$2.15, and so there's a bit of a gap there. We're one thing that bothers me, and I brought it up on a conversation with one of the companies today that reported their Q1 22 results, and it was a natural gas company. And I brought up that storage is not building in Canada and the United States sufficiently for the withdrawal season that starts in November, and then we're, 18% below where we were on the 5-year average and 20% below where we were a year ago. And the industry is, focused on paying down debt and shareholder returns and not growing production to build up on storage. And my view is that if we don't have enough storage by November and we have a normal winter or a colder than normal winter, we could see massive spikes in the price of natural gas, which would mean that homes would be paying, households would be paying 2 or 3 times what they paid last winter on their monthly bill. That would be a politically sensitive situation, and definitely would have a rebellion, and a lot of people not able to pay their bills to their local utility. So that, to me, is really the issue, is that the focus on shareholder returns, which the oil companies, natural gas companies have been pushed to by many of the investment managers. I think that there's the societal of the ESG requires companies to meet the needs of the community, and if they're focusing on shareholder returns and after they pay their debt down, which I have no problem with, get rid of debt is fair. But the minute they say that all the focus after that is to shareholders, I think they're missing their S issue, which is meeting their societal requirement of making sure there's enough natural gas in storage to meet the winter needs of Canadians going forward. And I think the industry is probably going to have egg on their face, or be definitely maybe even have the bullseye on them, where the governments and the media go after them for focusing on their self-righteous shareholder returns rather than their community responsibilities.
Well, I think companies gave up on that in the 80s, didn't they? We had the movie Wall Street, Greed is Good, and no one ever said it was bad.
Well, I think that we're seeing rebellion around the world, and we're almost 8 billion people on the planet. 1 billion of them are probably going to be starving, this next few months because of the food issue of what's going on with Ukraine and the heat wave in India. And so I think we're looking at some very severe dislocations in terms of the population, the death rates, lack of food and the insecurity. And I think we've seen more rebellions and more upheavals politically when people can't be fed. China's experienced that. Tunisia, if you remember, the fellow who lit himself on fire, and that started the beginning of the problems in the Middle East. And I think that, if we don't, solve and make sure we have enough food for people, that to me is going to be the barrier that when that falls, that's going to cause umbrage and a lot of problems across every economy around the world.
Sure, and more pressure on the price of natural gas from Europe trying to wean itself off Russian oil and gas as well because of the conflict with Ukraine.
Yeah, and so, the choice they have is, burn more coal, which is wonderful for your environmental goals. But I think the more important thing is I think they need to wean industrial users off of it, because in Germany, for example, if there's a shortage of gas, industry shuts down, consumers continue to get the gas they need to heat their homes. So you could be looking at a severe recession in places like Germany, which is the juggernaut of the European economy. And that would then tip Europe into a severe recession. And then, of course, if Europe goes in and North America, United States, Canada goes in, England, as you mentioned earlier, is likely from their own view. And if that spreads into Asia, and look what the lockdowns in China are doing, they're going to be heading to a recession. And so many countries deal with China that are going to be impacted that we could see a recession that lasts sometime into 2023. And part of that is, if you do have a recession, you lose maybe 4 or 5 million barrels a day of demand. And that then, we right now think about shortages because Russia and OPEC's not increasing. Well, all of a sudden, 1 million barrel a day shortage that is causing the price spike we're seeing could swing to a 4 or 5 million barrel shortage, and that could drive the price of oil down below $60 WTI, and fairly quickly. And again, if people think that's nuts, just pull out what happened in 2008, 2009, pull out what happened in 2020. The price of oil, when it goes down just as sharply and maybe even sharper or faster than it does going up.
Can Canada step up to the plate in any way to improve the world food supply with Russia and Ukraine coming offline?
Well, the first thing, of course, is fertilizer prices. Fertilizer prices are very high, and so how much fertilizer can farmers use? And where are can they hedge it via selling the crop in advance? And then then the gamble of Mother Nature. Does Mother Nature cooperate that they have a good crop? So I think it's going to be a tough situation. Where the federal government can be involved is making sure the transportation system works so that the grain that's in the elevators in the local communities has the ability to get to the export terminals, so that can be sold to help Europe, given the Ukraine problem, or to third world countries that are going to be desperate to grab grain, because if they can't, provide bread and the basics to their population, then the upheavals can occur.
Mm-hmm. Now, in an interview you'll hear on This Week in Money this weekend here on House Street, Wolf Richter said the problem isn't so much food production. The world has enough food, but so many people, especially in Africa, just can't afford to buy it.
I think that is. I would agree with the latter about not having the financial capability to buy it, and because there's no jobs, very little income, and high unemployment in many places in Africa. But I think that the comment about having sufficient food supplies, that to me, I think is going to be the one where the market's going to be surprised. And I think, just like we can see inventories of copper around the world, we're looking at inventories of grain coming down sharply. I don't have the data in front of me, but I think that's something to watch, because if we do see corn and wheat and soybeans and all the other basic commodities have significant declines in storage around the world, that would mean that we have a food shortage in physical volume, as well as an expensive alternative, or an expensive cost to the buyers all around the world. And the Western economies, the OECD economies, could probably afford to pay an extra $1 or $2 a loaf of bread. People in lower income economies in the Middle East and Africa and Asia will not. And rice, of course, is another one to keep an eye on, because of the Asian diet of using more rice. So I think that we're in a tricky situation here, and we've had a fabulous run since 2009 in the economy. We've had quantitative easing. We've had yes, the pandemic slowed it down and gave us a 2x4 over the head in Q1 of 2020, and then it took a while to reverse that until we had the vaccines. But I think this one we're more leveraged today in the system than we were in 2008, and the underpinnings of the economy are starting to pull away and fall away, just like they did in Q2, Q3 of 2008. So the central banks are not omnipotent. They can't. I think this thing is going to get impacted just as it falls on itself. It falls in on itself. So I think that people should be defensively postured. We've been recommending to our clients to be sitting defensively for the last number of months. So we were clearly early. But on a day like today, I'm pretty happy to be early and not feeling the financial blood that many people will see in their portfolios the next time they look at them.
Joseph, thank you so much for chatting with us.
My pleasure as always.
My guest has been Josef Schachter, founder of the Schachter Energy Report, online at schachterenergyreport.ca. He was speaking to us from Calgary. If you have any questions for Joseph or any of our other guests, you can send them to info@howstreet.com and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.